Nair. With me is my colleague Surupi Upadhyay. And we basically are going to be looking back at what has been a fairly brutal week. And if you're a bull, you're a bear, doesn't matter. It's been really a tough one. 6%. I don't remember the last 1 week. And this, by the way, didn't have 5 days. It had 4 trading sessions. And in 4 days, on an average, the Nifty lost about 170 odd points or so. So we'll look back. We'll also try and look ahead in terms of what lies ahead. So good afternoon.
Good afternoon, Prashant. I think bulls on the street have forgotten to say thank God it's Friday. That's a phrase they have completely erased from their dictionary, because third week in a row, we've had mayhem play out on the streets, and this time it was just really accentuating. Just a very quick recap of what transpired. A perfect storm, a perfect cocktail, call it what you want. You had all kinds of issues cropping up. A triple whammy of sorts with global issues, higher oil prices, the fact that US yields have been rising up, the Indian rupee, which continues to weaken. So this really were the ingredients of this perfect bear cocktail. And the death knell of sorts really came in on Friday with the RBI monetary policy, the RBI surprising the street by not hiking rates at all. Not just that, that obviously sent the rupee hurtling past the 74 mark, and that really became the biggest trigger for the overall fall. But within sectors, NBFCs are once again the big talking point, because the RBI did give a hint on Friday that more regulations are coming, perhaps a tightening of norms in the manner in which NBFCs raise money from the markets via CPs. Perhaps we're going to hear something on those lines, and therefore those NBFC stocks have really been pummeled. If I just talk about some of the numbers, Nifty is down almost 6%, as Prashant mentioned. The mid-cap index has fallen in step. Heavy-duty, large-cap selling is what this week was all about. We've seen a stock like Reliance, for instance, fall almost 16-17% in a week. Now, when was the last time you saw such capitulation in 4 trading days on a stock like Reliance? Nifty Bank, relatively better off. It's only down 2.5%, and that's because of the HDFC twins that tried their best to firefight, but they were also down for the week on. But I'll very quickly end by taking some numbers. The kind of fall that we've seen, oil marketing companies, that 1 rupee hike that OMCs have had to absorb is making everybody rethink about the deregulation policy of the government. So those stocks have been down between 16-17% to as much as 29-30% for the week gone by. Those are the names that I'm talking about: HPCL, BPCL and IOC. Go down and see some more names where the weakness was very palpable. ONGC, again, fears of maybe subsidy burden on these upstream companies as well. GAIL, Reliance, I've already mentioned. Some of the auto stocks on weak numbers. Eicher Motors, for instance, down almost 12-13%. M&M, Bharti, these are the other names. Very few people, or very few stocks really, that could stand up in the face of this onslaught, and they're on your screens right now. ICICI Bank, Hindalco, Wipro. And Yes Bank managed some recovery after the drama that bank and that stock has seen. It was up and about, but the week has left us feeling very nervous and edgy, I guess, Prashant.
Oh yeah, and I think Surabhi, the pace of the fall is what is really unnerving, because if the market falls 6% over a couple of weeks, it doesn't. Sure, it hurts people, but 6% in a week.
Yeah.
I think that is point number one. The pace itself just completely crunch time in that sense. Just to give you numbers, the Nifty has lost about 13% from its all-time high. It's lost that 13% in just a little over a month or so. And that's out of that 13%, 6% in that in this last 1 week or so has come through. That is about 166 odd points for every of the 4 trading sessions that we've traded. That is Friday to Friday. The Reserve Bank of India, with that statement where they said that they have no target or band around the exchange rate, it's kind of sort of thrown the door open. You could argue and say that the RBI, what it did was in its own place the correct thing to do. There's no real one right answer to this one. But I think what is now starting to happen is that the rupee dollar market will start to think of this as saying, well, maybe the Reserve Bank of India doesn't really care about where the currency goes, as long as it is it's following what's happening in the rest of the globe. It's okay. So there are no two-way risks here in the dollar rupee market anymore in that sense. Sure, the RBI may from time to time come and intervene and sell some dollars, etc., but there is no real two-way risk here in that sense, and that's the reason why the currency went the way it is. The equity market, if you look at what happened on Friday, the decision came, no change. Stock markets rallied almost 60-70 points. The rupee went to 74. Rupee stayed at 74 and past 74. The equity market followed the rupee. So, both those markets are feeding off each other at this point in time. It all remains about oil prices. I think if oil starts to retrace a little bit, don't know what will trigger that. If oil starts to retrace, that's the one big trigger. I think it will start to take away a lot of these macro concerns, and suddenly things will start to look very different. Because if you think about it, is there a crisis as far as the government is concerned or government finances go? Not really, not at this stage. You could argue and say that, well, will they meet fiscal deficit targets? The finance minister in the week gone by said, well, they're sticking to that 3.3%. But there's no risk of a large slippage, at least not at this stage. Is there a crisis as far as the corporate sector is concerned? Not really. Fair enough. There has been this mini credit crisis for NBFCs. I think we are past that now. Cost of borrowing is going up, but those are cycles. Borrowing cost goes up, comes down. What I was referring to is there a crisis somewhere in the government or government finances, the corporate sector? I think the answer to both those is a clear no. So I think that kind of leaves us with this question as to why the kind of fall that we've seen. This sharp, unrelenting, no buyer kind of fall. I've been speaking to people, and the feedback I get is that this is not, this is to a large degree, ETF selling. ETFs are essentially passive investors. They follow the market. Market goes up, they're buyers. Market goes down, they're sellers. And that is basically what is feeding this kind of downward spiral. I think you could safely call this a spiral that we saw in the week which has gone by. At some point it will stop, and maybe the market starts to form a base and then it trades sideways before it starts to move higher, but we are not there as of yet. The one comforting thing is that India's big outperformance, MSCI India's big early outperformance this year versus other emerging markets, that is fully reversed now. In some senses, with the week gone by, we are underperforming what the rest of the EM pack is doing. So that is as far as India is concerned. Just 3 points on the global picture, and this is the thing. You're in a situation where the US market is continuing to make newer highs, and the market here seems to be in a complete turmoil. So yields first. Yields across the board, not just in the US. US, of course, we saw that big blowout move, but other G10 country yields are also moving higher. So this is a global phenomenon which we are seeing. So cost of borrowing across the world is rising. And that is rising because there is growth. We're seeing growth, and central banks are also starting to act. Equity markets, you've got the S&P 500, which I think clearly remains extremely bullish. One could argue and say that there are bullish signs emerging even in markets like China and Japan, etc. Commodities, industrial metals are increasingly looking like they want to bounce from here. Precious metals are struggling. So that's basically just a couple of things as far as the global picture is concerned. Broadly, if you look at these data points on the global side, you'd scratch your head and wonder as to what is happening here in India at this point in time. But we've got an expert joining in to take us through that and make sense for us in terms of what's happening. I think Gautam Trivedi is ready.
Yes, Gautam Trivedi of Nepean Capital is with us. Gautam, thank you very much for joining us on the show. What a tumultuous week for this market it's been. And 1 month can make such a difference, right? Where were we in August and what September has done? Simple questions. Do you see any buyers in sight? Who will come in? And when?
I think it's a very good question. I think the problem is that you have to be realistic about the time frame of a bull market in India, and typically that has not exceeded 5 years. So I think let's be realistic. The previous bull market began sometime in January of 2003, ended, as we know, on the 4th of Jan, exact date, 2008. The Nifty went up almost 6x, and everybody thought this was invincible. And again, an external factor caused the market to have a major correction, and of course, the market thereafter in November of 2008 crashed as much as 57%. So I think there are some lessons to be learned from the past where things go out of control in terms of valuation, and the market becomes exuberant and irrationally exuberant, should I say. And as a result, people can't come to terms with the correction. So we've had, even in this case, a perfect bull market which began sometime in August or September of 2013. And now we are seeing in almost exactly 5 years later, a correction ensuing, caused mostly by external factors. And again, we've had two issues annually that, most analysts can't factor in: the monsoon and the price of oil. So I think monsoons have been reasonable, but the price of oil obviously has been a negative surprise, and that impacts the currency, it impacts everything as a result. So I do not see significant buyers right now. Obviously, the foreign investors are clearly not in a mood to support the market. They've been selling almost every day, as you've seen for the past few weeks, and I don't see that necessarily changing, unfortunately.
Okay, so Gautam, just makes sense for us as far as Friday's move is concerned, which is the RBI in a way having a very hands-off kind of policy statement, comments, etc. What the rupee did and what the stock market did. I mean, what is following what? What is feeding through into what, according to you?
I think, I did have a chat with a few people in the market right after the RBI policy, which, I was surprised, as were probably you and most people in the market. I think what the RBI seems to be suggesting really is that they're not going to raise rates to support the currency. That seems to be clearly out there. And at the same time, interestingly, they are forecasting a lower band for the inflation. So I think then what that probably means is that they believe that the increased cost of oil is being absorbed by somebody in the food chain, maybe the transporters, and it's not being passed on, which doesn't make it inflationary as a result. I know it's a convoluted argument, but that's the only sense that I can see coming out of the fact that they did not raise rates as much as they did, as much as they could. So as a result, I think the currency's taken a knock, broke the 74 barrier, and the market is really petrified of the fact that if the currency keeps sliding down, oil doesn't cool off, then we've got a major problem on our hands. So I think that's really what seems to be stemming and caused today's fall.
Well, the other major thing that people are worried about, Gautam, obviously is the future of NBFCs. I mean, NBFCs have been, in some ways, a part of the backbone of this bull, right? And now it seems that there are questions on the model itself. And we know new guidelines are coming. The RBI hinted at that on Friday itself. Now, we don't know whether there'll be some kind of a cap on the amount of money you can raise via CPs, etc. But what do you make of the manner of this relentless NBFC fall? Would you buy anything right now, or do you think it's just time to stay away for the moment?
It's interesting because the IL&FS episode and saga exposes yet another Nirav Modi style of a gap in the market of understanding what the real risk is. PNB failed to understand the risk, or maybe looked the other way, I'm not sure, when it came to the Nirav Modi episode, and obviously we've seen what's happened as a result to all of the PSU banks. And similarly in the case of IL&FS, though it's not technically an NBFC, it's an infrastructure company, I think the failure that the market's reading into, and really that translates into the NBFC space, is twofold. First, the failure of the rating agencies, and I just hope that they are brought to book by the regulators, because otherwise if this continues, you'll have many more IL&FSs in the future. And second is the role of the independent directors, and that's frankly quite disappointing. I mean, given the fact that this was, with the exception of HDFC, a sort of quasi-government body, with LIC being the biggest shareholder, it's really shocking to see that the independent directors didn't know what was happening, or chose to look the other way. I'm not sure what the right answer is, but I think that is spooking the entire market with respect to NBFCs.
Fair enough. Gautam, stay on. We have Rajat Rajgaria, Managing Director, Institutional Equities at Motilal Oswal, also joining in. Rajat, thanks for your time. Could you tell us what is driving this panic? Because this is quite a panic, right? 6% in a week.
Hi. I think if you just analyze the basic trends that we are seeing across emerging markets, today also, you had Korea and Taiwan, which had FI outflows of $300 to $400 million each, while the numbers in India are yet to come out. Yesterday, we had a number of $400 million. These are numbers that the markets have not been used to. And whenever you have days like this where FIs are selling to the extent of $300-400 million, I think you see an impact like this. One very important aspect of this fall in the markets is that the domestic flows, the domestic mutual funds, which always used to support the markets in a big manner for the last 3 years, there the flow moderation also has started happening very meaningful. And because you do not get the kind of support from the domestic funds now. The intensity of selling by FIIs are making a very big impact on the markets.
Yes, we're all awaiting the.
Just to take that point forward, FIs are selling, but my question actually is the second step question, which is why do you think that kind of selling is happening? Is it money moving back home, which is the US? What is driving this in your assessment, briefly?
I think the most simple assessment of this is money from across emerging markets are moving out to developed markets. If you look at US, they are in the vicinity of their all-time high. If you look at Nikkei, it is almost at a 27-year high right now. While if you look at emerging markets in dollar terms, India itself is down almost to the extent of close to 20% plus from the highs of this year, right? So I think the basic trend of FIIs moving their money from EMs to DMs is what is leading to this kind of a selling. And plus, of course, over the last few days, the kind of currency depreciation that we have seen, that has played a big role in terms of creating some scare amongst these investors as far as the EM markets are concerned.
Rajat, speaking of domestic mutual funds, I'm guessing a lot of these funds are obviously holding NBFCs because NBFCs have been the market's darling. In this fall, have positions already been paired to a large extent, or is it just beginning? My question is, are we going to see added capitulation, more sell down? Do you see funds actually changing their long-term stance on the NBFC model?
So if you look at financials as an overall weightage, it of course has the largest weight, almost at more than 35%. And typically investors have played the combination of private banks and NBFCs to make up that weight. I would assume that typically that 35% weight would largely be captured two-thirds through banks and 1/3 through NBFCs. So yes, NBFCs are there in the portfolios of almost every fund, but I don't think that NBFCs are a large part of the allocations of most of the domestic funds. It is the private banks which still is the lion's share of the allocation for most of the funds. But yes, as far as FIIs are concerned, the ownership of most of the NBFCs is pretty high in the FII portfolio. And that is where you are continuing to see the selling impact coming whenever they are looking to exit these names.
Fair enough. Gautam, time to get your shopping list out. Not necessarily start shopping, but get ready. Start getting ready. No, not yet.
No, clearly not yet, Prashant. I think there's some time. The market is now going into an election zone. For the next 7 to 8 months, you'll see results which none of us can sit here and forecast what they might be. And if they turn out to be negative for the BJP, again, could be a potential step down to where we are from the current levels. So I don't think now is a good time to start putting money to work. If you do want to nibble, and if you think there's value emerging in certain stocks, at the end of the day, let's not forget. Again, I'm saying something which is very general, but the fact is there will be individual stock picking opportunities. So I'm not talking about those. But if you find such opportunities, now's a good time to start dipping in and maybe buying some names, because the correction, as we discussed earlier, has been so rapid that nobody saw this coming. But having said that, do I see more weakness in the market? The answer is yes.
And where do you see it manifest from here on, Gautam? We've already seen it. Obviously, OMCs are a different story in themselves. The strongest names, including a Reliance, have started now crumbling. Even the strongest legs are now beginning to fall.
Here's the thing. If I look at some of the mid-cap names, let's leave the large caps aside for a minute, because they've only corrected recently, or the mid-caps have been correcting literally since the last 6 to 7 months. So let's look at an industry leader like Kajaria Ceramics. Great company, great management. Stocks corrected over 50%, but it's still at 22 times FY20 earnings. So is it a time to buy the stock? I don't think so, unfortunately. So, I think the correction, whether it's large caps or mid caps, I think especially mid caps, there's more room to correct in terms of basic valuation before people start getting comfortable and putting money back to work. But having said all of that, let's not forget the central point is there money available to invest in the market, whether it's FIs or domestic flows? And when you talk to people around, a lot of that SIP money which is coming in, the SIP money will start to, I think, especially given what's happened this week, start to slow down. There's been inertia within retail investors to turn off the SIPs, but you'll see that starting to happen soon.
Yeah, in fact, those are the kind of feelers that we have also been picking up from mutual fund participants. In fact, we will have the hard numbers from AMFI next week. Let's see. Rajat, final question to you as well before we thank both of you gentlemen. Do you have anything on the shopping list in mind as of now, or are you just standing back for the time being?
Well, I think definitely you have seen a lot of the expensive valuations now getting corrected for many of the stocks. Right now, you are seeing a broader level sell-off happening, and people are selling what actually can get sold into this market, and that's why you are seeing this week some of the stocks that have led the fall are the heavyweights. But I think there are many spaces where our outlook remains reasonably positive. I think whatever is happening in the system from a private bank's point of view, you will see things getting better for them, both on the liability and the asset. And that is the space that we remain more positive in the wake of the recent events also. And many of those stocks have also seen good corrections. I think if we can keep picking out stocks which tend to benefit more or get impacted less from the developments which are happening both in the global space and the local markets, a lot of those stocks are getting a lot more reasonable than what they used to be a month back.
Okay, Rajat and Gautam, thank you both very much for joining us and taking us through what you're making of things at this point in time. We will take a very quick break at this stage. We'll come back. Ashwini Gujral will be joining in, and we discuss the market on charts, how we're looking, and what's coming back into.
वाह, lovely chandelier.
ये तो लंदन से है, ये पेरिस से है,
और ये टूटा प्लेट जापान से लाई क्या?
हो गई ना बेइज्जती। टफ जर्मन ग्लास टेक्नोलॉजी से बना नया चिप रेजिस्टेंट ओपलवेयर फ्रॉम सेलो।
GIC-RE presents CNBC TV18 Mutual Fund Awards. At these times, only on CNBC TV18.
Presented by GIC-RE, the Indian reinsurer with a global footprint. Associate sponsor, SMC Global Securities Limited. Digital partner, Jio.
NMDC Limited, the single largest producer of...
Welcome back. It's time to talk technicals. Levels have just come and gone in this market. We have Ashwini Gujral joining in with his view. Ashwini, what a brutal way to end what's been a catastrophic week for the bulls. 300 points down on Friday, 6% down for the week. Your thoughts?
Well, going at the speed of 300 points on the Nifty a day, I wonder how much longer this can last. But the simple issue is that this is a financial bear market, and the biggest group in the market is financials, including NBFCs. And today you can say the RBI governor disappointed the financials, and hence we again accelerated below 10,400. Now the next target here is 9950, 10,000 from where we turned and went up to 11,800 the last time around. But it looks very difficult given all this macro situation, rupee, etc. Will we turn at 9950, 10,000? Maybe you'll have a substantial rally. But the way we are falling, that just means that there are no buyers. I have not seen a 20-point rally throughout the day. So if bears have this kind of control and nothing to stop them, you'll be lucky if 9950 holds on.
But you think 9950 is coming for sure, and not very far away in any case?
There is no doubt, because these banks etc. were holding on for the last couple of days, but again even they have accelerated. So that way now basically IT is IT could stand against the market. Rest everything is collapsing, and the way fresh falls have happened on Bajaj Finance, etc. And now that if consumption is coming under threat, then all of those stocks still have more weight to go.
Okay, Ashwini, then trades for the coming week. I'm guessing you're looking at selling.
I think financials have restarted, so Bajaj Finance is a sell with a stop of 2010, target of 1950. DHFL is a sell with a stop of 278, target of 264. And Canara Bank is a sell with a stop of 223, target of 207.
Okay, Ashwini, thanks very much. 3 sells and 19.